Connect. Use new hardware. Can you hear me? You should be able to hear me now, hopefully. Emmanuel, can you hear me? 18th, maybe. Mohammed, can you hear me, guys, over there? Can you hear me over on GoToWebinar? Hope you can. It's my first time you're live. Thank you, CG Big Dollar. Thank you, Mr. Your voice is silent. Is it still quiet, everyone? Can you still hear me? Manuel saying he's now. He can. Good. Right, let's get going, guys. There's a lot of you over on GoToWebinar as well. They can hear me loud and clear. Hope you can see the slides. Let me just share my screen. You don't want to keep looking at me. I want to share them. I want to share. I want to share that screen, which is screen 3. So many screens to see for normal. Right. Okay. Right. I've got my slides on. I've got my charts, and we're ready to go. Sorry about that. 8 minutes late. Hope you can all hear me. We can hear you. Yes, you can. You can see me on YouTube and LinkedIn. Hello, CJ Big Dollar. Yeah, it's been a busy week. Obviously, earnings season has kicked off big time. We have usual issues, some big beats, some big misses. We'll have a look at gold, Adele, and Mohammed. Don't worry. Let's just quickly run through the events of the week. So it's been a significant week for me as a Brit living abroad, obviously, but as a Brit seeing that CPI number here at 10.1%, shocking. Still over in double digits, by far the highest inflation in Western Europe. For the United States. We had very strong claimant counts as well out of the United Kingdom. Did I say United States? I meant United Kingdom. Out of the UK yesterday as well. So that's putting more and more pressure on the Bank of England to actually act. Obviously, the rumour is, not the rumour, but the momentum seems to be possibly 25 basis points and a pause from the Fed. Across the English Channel for the ECB, it's all about more rate hikes. Will they get to 3.75? Mr. Lane sounded quite hawkish yesterday. There's some other big hawks around, so all sorts of things going on for the central bankers to consider. I say the earnings numbers were quite sort of strong. There's some ones that have come out so far. There's some notable exceptions. Netflix subscriber numbers came down, but that was part of their sort of ploy to reduce password sharing. The second quarter outlook was very weak as well, so we had a big dive immediately after those numbers came out. But that was all recovered when more further into the data there was a talk of lots of free cash flow within Netflix as well. And there's that abandonment of their DVD delivery service, which is where they started 20 odd years ago. But who's still buying DVDs? I don't know. But I'll be live for about an hour, CJ, because I need to be elsewhere from about 4 o'clock my time, so an hour and a bit probably. Sterling very much in focus this week. Retail sales and GDP was very strong out of China. We didn't get to see that lift that you might have expected with that number because, still historically it's still quite low. And there's lots of skeptics out there saying that, if China's going to grow 1.4 billion people, they're going to grow their economy back to pre-pandemic levels. This needs to be much higher than 4.4%. 4.5% is obviously significantly higher, but perhaps not as good as many were expecting. Retail sales very, very strong bounce back. The Chinese consumer is very much in play. Tonight we've got, or tomorrow morning I should say, we've got further inflation this week, this time from New Zealand. 7.1% is expected. Again, a decline in the headline, but again, it's all about the core. The core number in England, it's not in the UK, I should say, is still holding up very, very strongly at 6.2%, much higher than the 5.7% in the ECB. But it was the food sector, the non-alcoholic and food sector is running at 19.2% in the UK. 19.2% in the UK food inflation. Absolutely horrendous for the average working family, and obviously doesn't help businesses either. How much of that is to do with Brexit, I would argue, quite a significant part of that has to do with Brexit. But anyway, that's politics, and let's not drift too far into politics, shall we? That's it this week. It's the third week of April. Next week, Friday. Sorry, PMIs kick off on Friday. How could I miss Friday? PMIs, remember, they're forward-looking pieces of data. They're quite key, but as you can see here, quite a mixed picture across the globe. German sort of services area, composite crawling into positive territory. The manufacturer remains anchored well under positive territory. Remember, anything over 50 is the sector expanding. Anything under 50, the sector is contracting. So as you can see there, German manufacturing still remains in contraction. Services expanding, and the composite number, either it's the combination of manufacturing and services, is also positive for the EU area. Remember, the services section of the economy is much more significant than, as far as GDP and growth is concerned, than the manufacturing sector. But manufacturing, countries, companies, people like to make stuff, and it's a very symbolic sector. Talking about the services component of an economy, the services component of the inflation in the UK this morning, 5.7% again, so very high there as well. Was it 5 point? Yes, 5.7%. The services number, really, that I can't get over that food number. It's 19.2%, but I will have to get over it, I suppose, won't I, as we move forward. So, forward-looking data, Friday the 21st. Next week, it's much quieter as far as high-impact events are concerned, at least it is from our calendar. Another reading of CPI next week from the Australians. Durable goods from the US used to be quite a significant data point, the durable goods. It seems to be losing a bit of its significance as we move forward. GDP from Germany and the wider EU also next week on the 28th. And then the following week, we roll into May and obviously the ECB latest reading of inflation from the ECB as well, but that's still a few weeks away. So there we are. Lots of things to get your teeth into. I've got a strange question there saying he's not a staff guy. I don't understand what you mean, my friend. You said everything's okay. Good. Okay. Let me just do those questions. I'm sorry. I'm just clearing some questions. Odongo said he needs to try it. Okay. Well, we're here to help, Odongo, my friend. So that's the data. So what do you guys want to have a look at for the next hour or so? Let's have a look. Who's first request? Remember, guys, if you can put in the time frame that your actual trading time frame and why you trade that time frame. Otherwise, I'll default to the microphone has issues. It's saying. Can you all still hear me? I wonder if it's this heads. I wonder if it's this connection. I'll try and keep it. Microphone issue. Can you still hear me, ladies and gentlemen? Mohammed just finished watching my scalping webinar from yesterday. Good. I hope it's useful. Guys, right, let's have a look. Anybody over on GoToWebinar? I'll give you first tilt because you were here first, about any questions you want to have a look at. Everybody can still say they hear me, which is good. Okay, so let's get rid of I'll bring in my next slide. Next slide was obviously our chart. So let's have a look at our charts. Who was first up? Let's have a look. We can do this, let's say, for an hour or so, guys. Mohammed was first up over on YouTube. Saeed, I'll get to your sterling number in a minute. Actually, let's first up is sterling. So Saeed's actually about sterling. We'll come back to gold in a minute, Mohammed. Don't worry. So sterling, big strong rally here on that inflation number. But it's immediately reversed it, and that's the question that Saeed's asking. You don't necessarily need to know, Saeed. It is what it is. Okay, that would the expectation that the Bank of England will have to raise rates more. They're talking about a peak rate of around about 5%. Depends how you calculate it, 4.933, 9.35, some of them. But lots of the banks have raised their expectations for the Bank of England at their next meeting at the beginning of May also, obviously. So if we look at the daily chart, guys, that's still bid. It's still rising. We went in to test the 20-day moving average on that. This is the 21 exponential moving average. It's not that much different to the normal 20 simple moving average, but it doesn't matter what individual lines you use. But this particular chart, let me reiterate it again. It's my standard default setting. 3 moving averages, the 21 EMA. The yellow line is the 9-period EMA, this one here, and the blue line is the 5-period EMA. So we're looking for them to cross. So here on an end-of-day basis, let's take that trend line out. Remember, from March, let's get rid of that close hand rubbish at drawing trend lines. So that remains bid. We did go over 125. For one close of day, we held over 125. Big reversal the following day, taken out that 3-day uptick. We then taken out all of that 3-day uptick earlier on Monday when we went to test the 21 EMA here down at 123.60. Can you see that? 123.62. So that's the key support area, Saeed. And then it's rallied yesterday and it was up this morning and it's come back down. So again, depending on your time frame, Saeed, that you're looking on, the daily trade here for April seems to be consolidating under 125, but above the 20-day moving average. Okay, so really 120 pip range. So it's quite a wide range, but it's not that big a range for the sterling, for the cable pair. So 124 is the major support, 125 the major resistance. Initial support is there, 123.65. So it was a strong day yesterday. If we go to the 4-hour chart, that's declined and now going sideways. You can see it's holding right at 124 and 124 here for the hourly chart as well. So the surprise, hotter inflation data this morning rallied sterling. Dollar's come back a wee bit. It's as much as the dollar improving as sterling weakening. So we've got a bit of a combination there. So we're back to 125. That's the key level moving forward this week. And you can, today, you see these big levels. Obviously, I say Monday we were down here at this 123.54, which is above that 20-day moving average there at 123.65. So that's, it just is what it is. The inflation was high, but GDP declined against the euro and the dollar. It actually went up in the immediate aftermath side. If we go down the actual time frame, you see when it came out here, that actually got the 5-minute chart. This was the 9 o'clock when the data came out. So it was immediately positive, then retraced, then rallied through, and now it's gone back to below where it was. It is what it is, Saeed. Don't try and explain it sometimes. Certainly on an intraday basis. Don't drill down too much about one particular trade, one particular trend. Here the daily remains bid, so you'd be looking to take long trades if you try to go with the daily trend. It's still up. Okay, so the hourly, the 4-hour trend had been up, then it's turned short quite significantly, then moved down. Now it's turned up, so it's in a choppy business around that 124 level. Excuse me. And the 1 hour here still, very, very choppy. But we've had some strong trends to follow here. Strong trends down, up yesterday, and then choppy and messy sideways, and very choppy today. So be careful, when it's like that. But the data, there's still, lots of some key data from the US, from the UK today. So the expectations of might got ahead of itself. The immediate reaction to the sterling number, because that particularly the food inflation that's weighing on general sentiment and general normal people's daily lives, with the food index being so high. So watch that one as well. Mohammed was next about gold. So gold continues to decline from this big 2050 high we had last week. There we are. And it's a bit of a down day today. So again, another indication of the stronger dollar relative coming through again. So you see this, so the dollar sort of ticked up, even though the data hasn't. is supporting a potential pause, but there's also talk that they may need to go a wee bit further. So again, just trade what you see rather than what you think or what the news is trying to tell you. So again, as a moving average trader here on this 1 hour time frame for gold, we've got some really nice runs. But yesterday was messy. It was sort of up a bit, down a bit, sideways. So that was a short tick this morning at 4 o'clock. A bigger move here at 8 o'clock, and then a bigger move again here at 9 o'clock. So gold has remained short. We've gone through 1980, we've gone through 1975, and it's continuing to decline here on an intraday basis. And Mohammed's point about 1850 may seem a long way away, but it wasn't that far away. Wasn't that long ago. Mohammed was talking about when we were at 1850, and Mohammed was talking about 2000 plus, and we've been there. So don't rule things out. Again, if we look at the daily time frame, where's the daily time frame? Well, it's a bit mess. But it's still bid. But today, interestingly, we've broken that key 21 EMA. The 5 and the 9, I don't know if you can see that on this chart, but the 5 and the 9 here that is crossing. So the 5 has crossed from above to below the 9, and this may be looking, having closed out the short trade, this long move up here as it's gone under the 9 period here on Monday, bounced yesterday, Tuesday. So if this continues to decline and closes down here, this will be triggering a short position on this particular time frame, on this particular asset, on this particular chart setup. So it's all about where you go. So here, the daily ATR is about $30 here. You can see that down here. So typically, you can't see that because Mohammed's in the way. Let me just hide Mohammed. You see here, that says 30 or 31 down here. I hope you can see that on the daily time frame. So it's typically moving about $30. So at the moment, we're down here, moved a significant amount of that already, moved 30 odd. So it's over the average move of the last 15 days at 1732. So if 1972. So if 1975 holds, we hold below it today. Mohammed is correct in perhaps anticipating 1850, the next level down, if tomorrow's another a significant $30 move, but obviously not all in one direction. Sorry. So there's our daily. There's the 1 hour declining to the downside for gold traders. Okay. CJ, hi. Good afternoon. Luanda, are you going to give us some tips how to trade events? Luanda, if you want to trade the news, Luanda, watch our Trading the News webinars, okay? I'm not allowed to give you tips. I can't tell you what to do. I can show you what happened or what could happen. And that's, we would expect on the data. Again, markets aren't logical, guys, okay? So the CPI data, the inflation data, was very hot for the UK. So we had this immediate, what you would expect is a normal sort of reaction to it. The decline since then, logically doesn't make sense to the news that's come out. But what's been happening is the dollar's come back a wee bit into focus. It's got a wee bit too oversold, and so some have decided to buy it. Okay, yeah, so the dollar has sort of benefited from this very sticky inflation data. So things getting, if inflation is going to stick around, that's going to slow down the rest of the economy. So it might also, although the jobs numbers were very, very strong yesterday, it makes the job of the central banker even more complicated. So remember, but we've had these wild swings in expectation. Remember, we were talking about the worst 2-year decline in the UK not so many months ago, and we're going to have a 2-year prolonged, protracted recession. And now we're talking about looks like there's no technical recession happening in the UK, but with food inflation at 19.2%, the average Joe in the street isn't feeling there isn't a recession kicking around, or we don't feel quite under pressure with wages getting eaten away with this high inflation and inflation staying very, very high. So there we go. No more. Good afternoon. Good afternoon. We can hear me. We can hear you. We can hear me. Running. Addy talking about gold running down. So any advice? Well, again, I can't give you advice, guys. I'm not allowed to. But trade the trend. Trade what's happening. Trade what you can see in front of you. And as a trend following, a guy that this 2000 level is obviously a huge. Level below that was this 1998 for some reason, but it broke lower significantly this morning. I don't care why. And again, as a price action trader, we're under the 50-hour moving average. We've got flat 250 there. But for this strategy, that triggered earlier this morning. I said at 4 o'clock, and it's just started to run down. Looked like it was going to go up here this time yesterday. It didn't. So you've got to be able to change your mind and change. Be flexible, as we talked yesterday, particularly if you're looking at these short-term scalping strategies. So yeah, gold continuing to decline. I thought it might have stalled a wee bit at 1975. It doesn't seem to have done that. It seems to have ignored that. So if we look to the left again, if we zoom in here on this 1 hour time frame, we're at multi-day lows here, aren't we? So we go up the time frame, the 4 hour. Where's our next support? Well, it is really around that 1950 level. That Mohammed talked about. But before that, we've got a 200 period moving average at 1960 on the 4 hour to get through. The 1 hour, 200 period is all the way up there. So 1975 has been breached, 71, and then 60 for that 200 period on the 4 hour time frame. As you can see here, sorry, I'm chopping around too much, aren't I? Sorry. And there's that level there at 1960 on the 4 hour time frame. So there we go. Good afternoon. Good afternoon. Good morning. Where are the support zones for Euro USD on the 1 hour chart? Asked Dine. So the Euro, where's the support on the 1 hour time frames? This is Euro. I haven't got the pivot points or the support and resistance levels on here, but technically, from my charts here, my friend, we've breached the key 200-hour moving average this morning. This here, last move was lower at 9 o'clock this morning, the completion of that that candle there, as it's see how it's crossed and gone up. So we rejected 110 on Monday. We tried to rally toward it yesterday. It didn't happen. We peaked out this morning at yesterday's high. So yesterday's high and today's high is sitting there at 109.83. So ultimately, that's a upside target today on the 1 hour. But we've been short and we're still short basically. So that's trailing down. We had a big candle down here at the 12 o'clock to 1 o'clock candle. The RSI is moving into oversold areas, and next level is our low here from Monday. So next level, Dine, is through here. Remember, so for 4 hours, 1, 2, 3, 4 hours here. On Monday, we couldn't breach 109.10. 109.10, 109.11 is our next target level. If you're still for that to perhaps bounce off that. If it's going to do what it did on Monday, it may not, obviously. And the momentum is to the downside. So 109.10, next level. And then obviously below that, 10 pips lower is the big round 109 level to the downside. If we go to the higher time frame, we go to the 4 hour chart, what does that look like technically? Well, there's that 109.10. There's the big round 109. And then here on 4 hour, I've got something at 108.75. And then the 200 period moving average sits at 108.50. It's going to be a significant decline in euro. There isn't a great deal of news to move that. Remember, it's Mark's very much focused on what the banks are going to say. So just excuse me, I'm just going to check my Bloomberg screen, which is over there. Morgan Stanley continue to be constrained. It says their shares are up 0.72%. Pre-market, that's probably not as good as they may have expected, but it looks like they've beaten expectations. But really, Morgan Stanley is very much a big trading house. So we had some big divergences in the trading reports from Bank of America and And let me just make another. So I'm talking about Morgan Stanley at the moment, guys. So it looks like interest income 2.939 million versus 2.46 billion. So they've missed on income from interest, and their pre-market shares are starting to trip a bit. They're now down, or they're up 0.6 of 1% from 0.72 of 1% as that number has come across. Anyway, it's Morgan Stanley, the last of the big Wall Street banks to report. All of them doing quite well. Some mixed numbers from Goldman Sachs and some mixed numbers there from Morgan Stanley by the looks of things. But certainly so far, Bank of America's been the standouts, ably supported by Citi. Wells Fargo did okay, but their shares sunk as well afterwards. So watch Morgan Stanley on the open this morning, this morning New York time. Hamza, we just looked at gold. DJ, I'll be here for an hour or so, perhaps another hour, 3:30, the absolute latest. How about Euro today? Well, Euro we just had a look at, didn't we? That's what this chart is, Adam, my friend. As I say, the next big support level is this 109.11, which was Monday's low. Here, this is a 4-hour candle, and then 109, and then 108.75 to the upside on an intraday basis. We need to get back over that 200-hour, which sits there at 109.50 zone, which is where you can see the magenta 20-period line is coming down to it as well. So that's key. Chima, hello, welcome. Hope you're well. If you're a trader, do join us. We're here to help. If you want any help, that's what we're here for. Okay. If you are trading or you trade a particular asset, let me know what you're interested in. I'm looking who's going to teach me how to trade. Donna, go to our website. Is our website, hfm.com. Don't know where you are in the world, but obviously it looks a wee bit different parts of the world. But this is our main website, hfm.com, HF Markets, formerly Hot Forex. Under Education tab, there's videos, there's training courses, there's ebooks, there's e-courses, there's webinars, which is what we're doing now. There's how to open your account, how to get going. There's our analysis that you write, our podcasts which you can listen to, and currently the hot potato is the earnings calendar. So here's this week's earnings calendar. So Bank of America, Netflix last night, Prologis yesterday, Goldman Sachs yesterday, ASM did well this morning. Abbott coming up later today, Nextra, Morgan Stanley. We've just seen their numbers coming out, and we've got AT&T and IBM after market closes tonight. Lots and lots and lots going on this week. So lots of opportunities. Where there's opportunity, there's obviously risk. So Ordinano, always manage your risk and keep your losing trades small. And anybody who's ever heard me talk about trading knows that that's one of my big mantras. So take care, my friend, and welcome. Mohammed, any more downside on gold? Well, we've sort of talked it, haven't we? Yes, you're right. There is the momentum. Big. This is a 4-hour candle. Remember, well, depending on your time frame, Mohammed, but that's a big down candle, isn't it? So remember, the size of the candle matters. See what happened here? The last big down candle, it bounced afterwards, but then it continued down. Then it bounced. So we might see a bit of a retrace, but you can't decide on the current candle, because you're a 4-hour trader and that has just started and that's still got an hour and a half for completion. But the previous one was a big fat zero. But as a 4-hour trader, you've been short this from around $2,000 and still short, even though it's retraced. Your stop losses would have been around up by just above 2,000. A big move down today. As an intraday trader, as we saw, the 1-hour time frame continues to decline. It's broken 1975. I would have expected a bit of support there, but it hasn't happened. So it may happen at 1970, but the decline continues. And you can see that on the 4-hour time frame for gold. The next line in the standard, we look to the left. There's a line there is really that big one there, that 200-hour at 1961, and the 100-hour, the 200-hour support at that 1960 level. It's next support for gold. Emmanuel. The Dow and the S&P on the 4-hour time frame. Certainly, my friend. So the Dow is the first one up here. So this is the 1-hour time frame. So let's just got the daily. Okay, so this continues to remain bid. What is the chart? What is the chart telling you? Well, the prices are going up, aren't they? We're nicely aligned on our moving averages. The blue line here, the 50 period moving average is flat. The 50 line is the 200 line is coming up. So there's a big support there at 32,630. There's a support zone through here at 33,280. Next support is 33,450, where the 20-day moving average is. This week we've cooled off a wee bit. I mean, I had quite a strong up candle here on the 13th, and now we've run out of steam. So 13th was a nice update. Friday we weren't sure what was going on. It was Friday. Monday also finished a wee bit high, but not much direction. And today we're down a wee bit, aren't we? But not much. So the potential signs of running out of energy here, but at the moment we're still bid. We did that there before we went up, and we're consolidating at these 33,900 levels. So obviously there's the big psychological, big round number, 34,000 we can't get to. Okay, so the daily is still bid. Our big support, the 21 there at 33,450. 33,450, big support, Emmanuel. Okay. So your 4-hour trade or trading a time frame looks like, again, it's exaggerating the running out of steam. The candles are much smaller, and we've sort of topped out. We're trying to poke new highs, but it's not doing it with any strength and any strong candle size or big momentum. Okay, so what again can we say? Well, we're still relatively positive, although you see we've tested and but broken the 20 period here. We tested it, it held. We tested it, it held. And at the moment, we've tested it and we're under it again, aren't we? So this, again, it's maybe a very tentative short position, but the last 2 or 3 have been stopped out, haven't they? That one didn't work. That one didn't actually happen. Well, you might have done that because it's a big candle down, but it's stopped you out quite quickly. That one didn't happen. So it may be 3rd or 4th time lucky now. But that is certainly, again, just pure technically following the rules. That went short at 12 o'clock today. So, but there's key resistance through these wicks here. You can see where we are here on this spot. See that? So far since last Friday, there's been a support area here at 33,825. And then we've got the 50 period moving average coming up to meet it at 33,790. So 33,800, 33,820, a big support zone where the market has been bought here. Okay, so that's a very tentative decline. The ATR is about 93 or something. It's 90 points from that. So from this short there, we haven't moved. 90 points would take us below this key level here. So let's see, very, very tentative short position there on the 4-hour time frame. But still, remember, we are against the trend, i.e. the daily chart. Emmanuel, is still going up, isn't it? Although it's showing signs of exhaustion. Obviously, the lower the time frame, the more the exhaustion will be visible. So if we go down, just to emphasize that, we go down to the 1-hour time frame, you can see much more choppiness over the last 4 or 5 days there. There's that 33,820, and there's our 33,800 level, the 200 period moving average on the intraday chart. So again, this one's been short, went short, then it stopped it out, and that's been short from this morning. So it's been short today. Looks like that's turning around and closing out as it's bounced back up above, interestingly, that 4-hour 33,800 level, 825 level. Okay, so tentative short on the 4-hour on the last candle. Would you play it through? Let's see what happens. S&P 500. This is a futures market here. So S&P. This is the USA.F. Emmanuel. So check you look. We're looking at the same chart. Okay. Bear in mind, this is one I use all day. But this green line, my friend, and my friends, is a daily trend line. So the 4-hour time frame, the 1-hour time frame, has hit the daily trend line and bounced from it in the last hour or so. The 4-hour time frame is yet to hit it and confirm it. So the big, again, just like the Dow, a very tentative short position here on this 4-hour time frame. in the last candle at 12 o'clock when this one completed. But again, we've tested the immediate support. So is it good enough to take? I would argue that probably isn't, simply because there's big fat resistance below that. If we have a consistent break of this 50 and this trend line, that could be more significant. This is the daily trend line, guys. Look, there's that daily trend line. But bear in mind, I'm terrible at drawing trend lines. You can see it's the wicks here, so it's not perhaps the most accurate trend line there. But it's still a point of order, and you can see here, less so than the Dow, the S&P 500 still has a bit more emphasis on it. It's gone higher here, but you can see again small candles Friday, Monday, Tuesday. No direction. Didn't close much higher, didn't close much lower. In fact, closed a little bit higher on each day, but nothing to shout home about. But rejection. But we are sort of eking higher. Last big series of uptrends was into the end of March, wasn't it? And we've sort of been sliding sideways in April, really waiting probably for the earnings season. So again, see how that one goes. But as far as your 4-hour trend is concerned, that's a week against the trend, short there in the last candle. Okay. Mohammed, I just want to scalp. Mohammed, any comments, any feedback? Please let me know. Good, bad, particularly bad, so we can improve things, my friend. Okay. Good afternoon. Good afternoon. Right. Okay. I've got some more questions over on go to webinar. Let me just see them. I can't. Are you going to do? What is the right time to trade and which quotes are most profitable? Says Valencia. What is the right time to trade? There isn't a right time to trade, Valencia. If you're trading intraday, the deepest liquidity, well, it depends what you're trading. If you're going to trade Forex, remember Forex and most CFD markets are available 24 hours a day, 5.5 days a week. So pick your time and fit it around your time frame. If you're really wanting to get particular and try and get the tightest spreads and keep the things on your side as much as you can, try trading the London time frame, the London business day, and then within that, when New York opens, that overlap between New York being open and London open is where the deepest liquidity of the 24-hour clock takes place, as we showed you yesterday on the scalping exercise. So again, but if that doesn't fit with your time scale, if you're out working or you're doing something normally, just don't get too hung up about that. But that's certainly the best time. If you're going to trade stocks, the best time to be trading stocks is obviously when the stock markets are open. So if you're trading UK stocks, trade the London timeframe. If you're trading European stocks, same sort of timeframe. So from 10 o'clock server times when the stock market's actually open. But remember, many CFDs, you can trade around the clock as well, even when the markets aren't open. So depending on the type of account you've got. So lots of people like to do that as well. So it's really up to you. Raj, we have to trade with this 3 indicator. No, Raj, you don't have to do anything. You don't have to. This is just what I set up. Some people don't have any indicators whatsoever. Find something that works for you. There are thousands of systems. Well, I'm saying thousand. There must be, yes. There's thousands of systems, lots of approaches to trading, lots of different time frames, lots and lots of different assets to trade. You've got to find the thing that works for you. There's billions of people in the world. It's not trading. Isn't an intelligence exercise. It's an emotional intelligence exercise. It's not an intellectual intelligence exercise. Okay, so don't beat yourself up too much about thinking you need to know the ins and outs of a particular economy or a particular technical indicator or a particular asset. Get the feel for what things do. What is going on. I mean, that chart there. Let me just get rid of me. I mean, this chart here is sort of generally going up, isn't it? It's going from. It doesn't matter what it is again. It happens to be the S&P 500 on the 4-hour time frame, but generally, from this side of my screen to this side of the screen, it's generally going up, isn't it? So it's trend. You'd say that's trending because it's going up. You can then nuance that as we go forward. So here we've got highs getting higher, and we've got low prices getting lower, supported principally by this big blue line, haven't we? So this is the 50 period. This is the 50 period moving average is really supported this move here from whenever that is, the 24th of March. So, again, trust your own instincts to stuff as well. Chima, hello, over on LinkedIn. CAD yen. It's not one I look at very often, but thank you for it. It's nice to look at something different all the time. So there's the same old stuff. People asking for the same old stuff. So CAD yen, where are we? Time frame, Chima. So look, you might have put it in later down because there's a lot, so I'm way behind. There's only first withdrawal promises, so I'll come to you in a minute. Dominican Republic. Hi, good afternoon, good morning, Dominican Republic. So Chima, CAD yen, let's just do it from the higher time frames. I'm not sure what you said. So the daily is bid, my friend, and that's a big. See what I say about positive candles. So we'd been in a nice downtrend here, and now we got a nice uptrend, and that's what happens. Don't get too hung about it. So most of March we were going down, most of February we were going up. In fact, we were, weren't we? We were up, we were down, and now we're up. So don't get too attached to, thing's got to go up or this thing's got to go down. Do what you see. So big break here from the 29th of March. Our stop loss would have been down here. If we'd started to move our stop loss up, we might have been taken out. But again, the 20 period moving averages kept you in the right track. 99.45 is a big thick line for some reason. Perhaps it's what we've talked about this before, but psychologically, let me just clear some of those lines off. I'm not sure why they're on there. Close. But yeah, I mean, the big line here is obviously the 100 number, isn't it? 100. Let me make that big thick line object list. Make it so we can see it. Let's make it yellow. Pink doesn't show up very well, does it? Let's make it a big, thick, or thicker line. There we are. And it's not quite 100. Let me just fix that. So 100. We go. So that's the 100 level. Couldn't get over it in February. Couldn't get over it in March. Declined from it all the way down to a support level through here, 99, 95, 25. That was where was that? That was January. We went to 94, so call it 95 basically. So 95 to 100 is what we've done from this low here in March. We went long, as I say, or this strategy would have closed out short and gone long on the 29th, and it's still long, and it's poked over the 100. So the question now is, how significant is the 100 level? As you can see here, as we were declining back in November, it became a support area, a resistance area here in February and March, and now a resistance area here in April too, but we're over it. The MACD is positive, the signal line is rising, the RSI, that's a 14-period RSI at 64, is rising as well, so that's positive. However, the ATR is declining, so the momentum up is suggesting it may be running out of steam, but we're over 100, so we need to break from there. Interesting, isn't it? There's if we look at, zoom that up, it's a big, big level that, and it can go sideways once it's there. Did then. So, on an end, Chima, it looks like it's a bit of a sideways action around this dot 100 level. But again, I don't know what time frame you're trading that. If we go up to the weekly, just to exaggerate things, there's that bounce from 95, and there's that 100 level. So that was a level, but we had a big, big down week, didn't we? Here, big, big candle here in November. So from a weekly point of view, the next resistance is there at 103.91. So call it 104, really, and that again sits through there. There's that 104. So 104 is the next upside, but that's a big week, wasn't it? So it's a long way from our end of day, but it's still trending higher. Trail your stop loss up. My stop loss would be probably around about here now on this one. If you're long this on an end under this candle here from last week, 99.40, call it 99.30. I'd say where am I sort of around here? Oh, let's fix there, somewhere like that. Around just behind the 9-period EMA, but that's still trending higher. Again, you should see still bias to the upside here on the 4 hour. There's that 100 on the 4 hour. So Yeah, but bias to the upside, that Chima, my friend. Um, Good afternoon. Good afternoon. Positive. How much gold down? IT second. I don't know. Again, don't try and get too hung up on it. I mean, you can set your target and get out when the target's set, or just trail your stop loss down until it turns around. That's what lots of trend following traders do until you get stopped out. The problem with that is you give a lot. People say, well, the problem with that is you give a lot of profit away, but you're still making some here. So here, it rallied up here and it turned around here. So you've lost that bit, but you've gained all of that bit. And it's just what works for you. So as I said earlier, IT. The trend here on the daily time frame is still down. We're still not breaching that 1970 level. We did breach 1975 very quickly. But obviously, I haven't been talking for very long, so we're down. It's down. And as I say, next support, as I said earlier, I'm not going to keep repeating these gold stories, is here 1960s next big support is the 200 period on the 4-hour time frame, the higher time frame. But as you can see, that's down. The daily, had been up, and today, at midnight tonight, when this candle closes, will it be below the 21 EMA? If it is, it will have triggered a short position on gold. From a big long uptrend, we've been positive and over the 21 EMA since the middle of March. So it's been a nice, lots and lots of pips from the 10th of March up. Well, thanks very much, all the way to 2050. It closed out the long position here earlier in the week on Monday when it went under the 9-period moving average here. See, for the first time, the yellow line. See that? That was, so we got all of those pips there from here to here, how many days that was. That system would have pocketed all that gain there. Yes, you've missed out these last two upsides, but it's got you out at what's that? 12,600 points. Hundreds and hundreds of pips. 6.85% move in the gold market. Thank you very much. Enough to Anyway, some people say, well, why didn't you get out early? Because when it first got to that level, it went higher, didn't it? I didn't know it was going to come back, and it didn't break down, so I stayed in, didn't break down, got out here on Monday. So, yeah, let's see what happens. Mohammed, did we look at Euro USD 1 hour and 1 day? So the daily for Euro is the important thing. So what's happening? Well, it's down, isn't it? Sorry, it's 1 hour. Sorry. Thought that was wrong. It's consolidating, basically. It didn't like 110. It's topped out. It's come back down, and we're consolidating currently, waiting for some direction. Remember, a couple of weeks we got the ECB and the Fed again with their interest rates. The ECB likely to be more aggressive than the Fed, hence why we're still bid. So again, euro dollar remains bid. It's over its 21 EMA, but it closed out its final uptrend on Monday again because it closed back under this one. It'd done it there again, but it got back in here on the 11th and rallied to the top, got took out. So a little gain on that, but still a gain. But we're still above support, which sits under 109 at 108.92 or 108.93. So it's still bid to the upside. So the trend is still intact on the daily time frame. As far as your 1 hour trading time frame, much more opportunities to be long and be short. So short, triggered long here, out, long, ran out of steam. Yes, as we saw, we did this earlier, didn't we? Yesterday's high was today's high as well. Today's high couldn't get over yesterday's high. Yesterday's low took us down to there at 109.20, and we've already spiked under that. So the hourly time frame went short here this morning at 9 o'clock. Couldn't quite break the 200 hour until an hour or so ago. The 1 o'clock candle with a big down move, and we're still short basically with my stop loss up here somewhere at the moment. So that's short and going short, Mohammed. Ezekiel, Valencia, absolutely no problem, my friend. We're here to help you. Hang on a minute. People repeating stuff. That's why I'm just beginning on demo. Hasn't invested yet. Ezekiel, don't worry about that. Get comfortable with using the platform. And the key thing with trading, Ezekiel, is to actually understand yourself first and foremost. It's not all these things, these charts and the economics and the bank earnings and all that sort of stuff. It's good to learn that. Anybody can learn that. But the principal thing is about risk management, managing what you have and understanding how your account works, understanding the product that you're trading. So make sure you fundamentally know in your bones what leverage means and how it impacts your account, how margin works, the spread on the account that you're trading. So that's the principal things, Ezekiel. And you can get good with a demo account. The only issue with a demo account and using a demo account for any length of time is that it's not real money. Okay, and our brains and our subconscious and all our ego and our patience and our discipline all get changed and mixed up when we start using real money. So again, I can't tell you what to do, but use real money to really feel the market, feel how you're dealing with it, the risk, the reward. Can you sleep at night if you've got a trade open? Simple as that. If not, it usually means you've got too much risk on the table. How much risk should you have on the table? Well, not very much of your account. 1% per trade, ideally. Very difficult with small accounts. Maximum exposure at any one time, a few 10, 20%, depending how aggressive you want to be. But again, only you can work that out. There's lots and lots of ways, as I keep saying, horrible phrase, but I keep using it to skin a cat, as the Brits say. So find out what works for you, Ezekiel, and we're here to help, my friend. Okay, Chima, we did look at CAD, didn't we, for you? So perhaps you've repeated it. Gabriel saying I'm scalping BTC. Well, very good look, my friend. Let's have a look. What's Bitcoin doing? It's been a right old move today, Bitcoin. I don't know who's been. Is anybody? Sorry, I haven't got the chart. Get rid of me. Anybody? I've been sort of away from my desk until I came and sat down here at this trading terminal. But anybody know what's caused that big candle down in today for Bitcoin? What caused that? It wasn't just the dollar getting stronger, was it, or whatever? But it's a big 5 and a bit percent. Not that that's that unusual. A 4.5% move here from the opening price here at 30,330. That's a big move down, Gabriel. So I hope you got some of that, or perhaps you've caught the bounce from the bottom. But if you're scalping, let's look at the 5 minute. Yeah, there's a huge move again. So that's been short. It's looking to try and move a bit higher. So the last trigger here on the 5 minute was a week break there. So this is exactly the same setup we've been looking at the hourly time frame, but a week break at 13.55 to the upside, but it's ran right into its 50 period moving average there. So, and the moving averages are flat, so there's not a lot of action going on there compared to the action we've had earlier in the day. So yeah, lots of profits being bagged on Bitcoin intraday traders. I guess we've crashed from 30,300 plus up here this morning to the 29,000 level. But again, it's found supporters and bounced off that this morning. So the best of luck, Gabriel. Watch the spreads on Bitcoin as well. So be careful there as well. Euro there, we did this, didn't we, Mohammed? Have you done this? Yeah, a lot of you repeating yourself, so I didn't get to you in time. Thank you very much. Chima, I hope I've answered you. Sorry, it's they come through quite. There's lots and lots of people on here, so I can't. I apologise if I didn't answer, but hopefully you've got that now. Rashida, please, I want to understand the smart money concept. Please, can you do a webinar? Yes, smart money. That's a good point. It's a very hot topic at the moment. Let me make a note of that. Smart money. Yeah. Particularly in Asia, particularly with Indian and Southeast Asian traders as well. Rashida, I don't know where you are. But yeah, certainly we can do that for you, Rashida. Absolutely no problem. Where was I in the questions? I'm scrolling through here. Is it okay to still hold a long on gold expecting a bounce back? This is one of those classic questions, ABC. Your strategy should tell you what to do. Every time you open a trade, and this is what the pros do, where are you getting out? Where are you for a loss, to accept a loss, or where you're getting in, or where you're getting out to take your target, to take your profit. If you don't know where you're getting out, either to take a profit or to accept a loss, you're just trading in hope, a BC. And hope, you can't trade in hope. You've got to get rid of hope from your mindset when you're trading. The biggest problem, I found a really nice picture here. See if I can find it. I talk about mindset all the time. Sure, anybody that's heard me talk before knows about that. But it was a really nice picture I put up on. See if I can find it again. I put up on my Facebook feed yesterday about hope, and it's our mindset. It was, wasn't it? It was about. Let me see if I can find it for you while I'm talking. And you can't trade in hope. You just got to accept that you'll win some, you'll lose some. But you keep your losing trade small. That's the key thing, and it is a mindset thing. So that trade you're talking about, BC, are you actually in a trade, or are you just hoping for it to go down? You think you're going to catch it? Because that's quite often what happens. There it is. Where can I show that? It was on Facebook. I don't know who put it up, but let me just. This is, just let that sink in for a minute, guys. The biggest asset in the world is your mindset. But look at the pictures. Look at the images there. The old guys, under the stomach on that. The new mum's off the out, going back to work, worried about her baby. The guy that seems quite comfortable, the dude here with his half shaven, he seems quite, got the sun shining out of him. The flowers are okay. The guy trudging to work, has got the weight of his books on him. He's got the weight of the weather. Mr. Angry, got the football. So it is, and that's that's the key thing, guys. Mindset. Accept that you lose. Many people can't do that. So depending how big your loss is, ABC, how big is your loss? If you're long gold, where did you get in? Where were you expecting to get out? If you weren't, get out now. Close the position. I can't tell you to do that. Sorry, ignore what but that's the thing. Are you expecting to bounce back? Well, who knows? In a sense, who cares? In a sense, just trade what you see, depending on your time frame. So, the end of day trader, BC, to answer your question, he's still long. No, he isn't. He got out on Monday. So tonight he'll come back and scan these charts and say, "Oh, look at that! That's closed below its 21 EMA." If indeed it closes below 1981, because it might not before the end of day, and it'll see, is that a trigger of a short position, and he'll take a short position at the end of day. The 1 hour guy was short from earlier on this morning. This is this morning, so he would have used exactly this same setup. I'm not saying use this setup, but I'm saying looked like it was going to go long. It was a week long. That was wrong. 50 period, and then so that long was closed out for a loss, but he's more than compensated for it because it's a trend following strategy. And what happened then? I was on the wrong. I was zoomed in the wrong place, wasn't I? Here today, he's gone short here or here, and then he's added to it here potentially. There's a big down candle because it's broken the low of yesterday. So I don't know, my friend. It's where you are, what time frame you're trading. If you're a 5-minute trader, you've been short most of the day on this, and it seems to be bottoming out around. It doesn't really want to go below 1970, does it? We're at 1971, 1970.76 at the moment, but it's still looping lower, isn't it? So again, it's all about your time frame and how big your loss is compared to the size of your account. If the loss on your trade at the moment is more than 2 or 3% of your entire account, ABC, close it and get out. Just accept it. Okay, I'm not supposed to say that sort of thing, but because the loss will just tend to get bigger. Because again, I don't know when you got in, when you got out, but there we go. All right, I think it's some more questions here. Rashida, absolutely no problem, my friend. Delki, I saw what you've been doing. You don't want to tell no one what to do because you might be wrong too. Just little explanation from you, and everyone should follow their mind, instinct, strategies, or whatever, right? It's to do with I'm not allowed, I'm not regulated, I'm not I'm qualified, but I'm not regulated to actually give you advice. That isn't what CFD brokers do. And if anybody is trading with other brokers, CFD brokers, and they're giving you advice, they're telling you what to do, they're breaking many rules, so be careful. okay, Adelki. You have to find your way. That's why I might sound like I'm being vague, Adelki, but you've got to find your way. It works for you. This strategy, people saying, give me a strategy, give me a strategy. This strategy works, ladies and gentlemen. This works. And it works well enough to make money. Okay? Back test it if you don't prove me. It's the 5, the 9, and the 21 EMA crossing strategy. Watch the full webinar how to apply it. This happens to be, I'm getting a bit agitated now, but because it's one of my big hobby horses. This works as well. This setup works very well. This is the TEMA and the AMA, the adaptive moving average, and the triple exponential moving average. This works. Okay, most strategies work. The problem, Adelki, and lots of everybody else, is that the application by the client or the customer just they can't accept losing, so they don't. They hold a trade that's been open for too long, like our friend Abisi was saying before. Is it okay to hold a long on gold? Well, depending on your time frame, but no, it doesn't look like it. Technically, I can say that in all confidence because technically, gold is. I don't know. I've got a gold chart on this setup. I haven't, but anyway, do you get my point? I think Adelki has got my yes. So it's all about your mind, your instinct. It's not the strategies. It's not the system. It's you. It's you. That's what you've got to beat. It's not beating the markets or beating the economic calendar or being smart when the news comes out. Don't try and trade the news. It's very, very difficult. And people pay thousands, hundreds of thousands a month to have data feeds that are very quick if you want to trade that sort of thing. As retail traders, we can't compete with that sort of thing. As retail traders, you can't really compete with that sort of thing. Okay, so yeah, Delgi, you've hit the nail on the head there, my friend. Good morning, Dominican Republic. The British pound, is it still going down? Well, it rallied really strongly and then it turned around, didn't it? So again, that would have been a big spike up. If you were going to trade that news, that looked good, but it turned around quite quickly. So it would have been quite a significant loser if you were trading on that news. Currently, again, these things don't work all the time. This is the moving average is flattened, so you don't really want to be in this. That looked good. That looked like that was going to keep going up this morning. That was a big candle, new day high, above yesterday's high, above Monday's high. Really positive, and what's it done? It's turned around. So logic doesn't work all the time. It's turned around. Accept your losing trade. So I've got in. Yeah, that would be quite a big. If I'd followed that and gone long there, which is was what the rules are saying. Let me just change that. So if I'd gone long there and the rules were, stop loss would be down here, that would have been quite a hefty losing trade on me. So I would have lost that today as well. You don't win all the time. That would have been a big winner. 400 points, 40 pips out of the bag, 0.33% of a losing trade. But again, following the rules, we'd have immediately taken a short position, which is sort of in the money at the moment. Not very many, obviously, but it's not a great trade simply because we're at a key, round number 125. We've been under it, tested it. It may go low, but if we, will we get as low as yesterday? Well, probably not, because that inflation data was still putting pressure on the Bank of England to move and perhaps move again. And the big professional banks have talked about the rate going to. I'm going to open the rate going to. Excuse me. It got very hot in here all of a sudden. The rate going to Sorry, guys, the audio back. Edna, Kanishka. Victor's saying here he's had some. I've had some experience with HFM and it's good, quite amazing. Victor, thank you very much, my friend. I haven't been called quite amazing for a long time. I know you're not talking about me, but very good. Yeah, sorry, I nudged it with my elbow. Sorry, guys. Hope you can hear me, everyone. Which trading style is profitable between day trading and swing trading? Solomon, you've got to find what works for you. You can be profitable both day trading and swing trading. What appeals to you? What is it that works with your risk profile? Obviously, swing trading, here, so let's say, that's pivot points, turning points. So this is sort of a swing trade. So here we're saying it topped out. This strategy, I don't know, let's go to the 4 hour, just to something different. So the 4 hour. So again, it pivoted here at 2050, The intraday guy, so that's a swing trader. So it looked at the top there. This strategy wouldn't have taken him short until here. So the difference is the targets are much bigger, the stop losses are much bigger, but you're making much bigger profits, obviously, but you're potentially making much bigger losses. But you're not trading all the time. You're not like having to watch the markets. If you're trading this on the 5-minute time frame, so it's exactly the same setup. This is the 4 hour time frame. So if you're trading this on a 5-minute setup, you're in and out all the time. So you've been short this morning. That has just triggered long. Okay, so 5-minute traders using this strategy on the 5-minute time frame went long here 5 minutes ago, literally, having been short all this time here. Thanks very much. Lots of pips. It's turned up. We've flattened out. Our red line is turned blue. So bang, we're long at 1973. Where might we get to? Well, obviously the first target will be 1975 in that 50 period moving average. If not, just sit in. Your stop loss. Let's use this as an example. Your stop loss is down here, the bottom of the target, really. That's the turn in the market down there at 1968. So we did go over 1970, but not much. 1969.75 or 1969, a bit lower than that. Call it 69.50. We got in here. So that's our entry point. And again, 400 points, 370 points, 0.21%. But just sit with it, see if it happens. It might suddenly come back down here and stop us out, but you're not making very much on that one. You're making a few moves compared to so it's what fits you, Solomon. I can't tell you what works, but profitable traders work on all those time frames. Losing traders work on all those time frames. That's the issue. And remember that most traders lose money because they can't cope with losing, but they end up blowing their account and giving up because they get too much. They've got no patience, got no discipline. They don't understand really what they're doing. They don't invest enough, or they invest an amount and then expect it to perform as if it's a much, much bigger account. They're using leverage that's too big for them and stuff. So be careful. So yeah, sorry, King. Yeah, I did. I elbowed. Thank you for that. Yeah, Kashinga saying it's back. Right, good. Please repeat my part. Santa constant. I can't see what you. Is the pound? Yes, Santa. You said please repeat. Yes, it's still down. Yes. Can't hear you. I still can't hear you. Your sound has gone again. Says. No, it looks all right here. That was a few minutes ago. Yes. Oh, you've obviously all given up because my sound's gone. Chima. Hope I'm back. Am I still here, Chima? Chima's saying he still can't hear me. Anybody else? Everybody's saying they can hear me over on go to webinar. Everybody else is saying it's okay. So if there's no more comments, I'm going to go because I've got an interview at 4 o'clock. So any further assets, ladies, gentlemen, traders? Leave you with the gold chart. Today, it's been a down day today. It looks like it's bouncing here on our 5-minute chart. The 15-minute won't have turned around yet. Oh, there you go. 15-minute needs to cross in. So a long way for the 15 minutes to go, but the 5 minute looks like it's bounced. Is it going to last? We'll see. We were up, we were down, we're up again. So yeah, getting to 1975. Chima, have you gone, or can you hear me? Uh, Bum, 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 bum. Benjamin. What of gold? Well, this is gold. Benjamin, it's just ran into its 50 period moving average here, 1975, the 5 minute trade. Just triggered long from being short, from up here, 2000 all day today. We've been short on the 5 minute time frame. Lots and lots of pips on order. Now it's bouncing a wee bit, but, nothing compared to the money that's been bagged on this downtrend here. That was the major entry there on that 5 minute time frame. It would have gone. I haven't zoomed that up. Can you still see it? No, you can't. So that's the big break of the. It would have happened 5 minutes before that, but the big break was 10 minutes later. It would have added there because we've broken this low level. Yeah, get a great. There's no point, once it's broken the 2000 level, that was a big down 5 minutes. You add to that, you could have added to it again. That's follow through selling. Just, trade what you see, what is happening now. And if 5 minute time frame is what you're trading, you were short, got out. It's gone over the nine period, got back in short again here, tested into 1970. Didn't want to go below 1970. 1, 2, 3, 4, 5 candles, and now it's up. We've made a little bit of dollars to the upside. Is it going to break and hold this 50 period moving average on our 5 minute time frame? Who knows? Okay, I'm not sure if you can. I can hear you now, says Chima. Chima, thank you very much, my friend. Right, I'm going to wrap up, ladies and gentlemen, because I've been here an hour and a half, and I've got another interview to get to. Do join us for our other webinars this month, my friends. Last week was really that key one on risk management. Tomorrow, one of the oldest and most respected channels, the Doshian channels with Otto tomorrow. It's been around a long time. If you've not heard of it or you don't understand what they are, it's certainly worthwhile understanding, where they came from and how significant they are, and how the fact they are still very much relevant today as gold cracks on to 1976 and breaks our 50 period moving average at the moment. Andrew's back next week. You'll all be relieved. She's talking about correlations on Tuesday, and on this time next week, she'll be doing some live analysis with Andrea next Wednesday. And we finish the month next Thursday, and what is a strategy, how to put a strategy together with Otto. Then the May webinars are coming up, and I will add the smart money one that somebody asked about before, and I can't remember what that was. But anyway, ladies and gentlemen, thank you very much for your time. Any Arabic speakers here? I'll be with CNBC in about 45 minutes, at 4:15 server time. I'll leave you with that 5 minute gold chart, which has got a nice big candle at the moment. And take care, stay safe, and may the pips be with you all. All the very best, everyone. Bye-bye.